Okay, so all of that is our context. So the takeaway message there, where we're setting the scene, Mayer multiple got to a level, or the 200-day got to a level where people probably start to take profits. Pricing models are kind of suggesting we're just a little bit overstretched. There's a lot of people who are in profit. So the thesis that we're running with here is that people are likely to start taking profit. Now, we know that long-term holders are pretty dormant until we get to all-time high. So let's just put them in a bucket for now. We won't worry about those. We're going to look at only the short-term holders. These are people who bought recently and therefore are the most likely to start spending. Now, this funky looking retro chart is, again, I want to introduce this. We've got our short-term holder cohort. For those who are new and maybe not heard this before, short-term holders are all coins that have moved within the last 5 months, right? They've been mobile within the last 5 months. We use this threshold, 155 days, because statistically speaking, they are the most likely to spend again. Most coins moving around the Bitcoin system was spent within the last 155 days, and the vast majority of them were actually spent within the last day. So there's like this massive logarithmic decay or an exponential decay of how likely it is for a coin to be spent based on how long it's been dormant for. So the other concept is profit and loss. So think about this. On the rally where we broke from 30K or above 30K, we had about 5 months oscillating between 26,000 and let's just say 31,000 for easy math. All 5 months, people were kind of accumulating and buying their coins in that zone. When the price broke out, this green line is showing us all the coins that went into profit. In fact, I'm going to zoom in on a slightly smaller time frame and we will come back out again. So what we're seeing here is the amount of short-term holder coins that have gone from in loss, meaning their cost basis was higher than the current price, to in profit. Now we've also got two curves here. In the yellow, we've got like the 30-day low of that particular model. So the other way to think about this, show me all the short-term holder coins that have been in profit for at least 30 days. That's what the yellow is showing us. And the brown is at least 90 days. So let's just kind of back out and think about what this means. The more of this brown color that we have, this is basically saying that lots of short-term holders acquired their coins during a long consolidation period. It's kind of a robust a foundation being poured. Coins are changing hands, investors are stepping in, and we really traded sideways for 5 months. Yes, it was volatile and it was choppy, but lots of coins changed hands up here. And more of these coins suddenly went into profit because they built that foundation. That essentially enabled the rally higher because all these coins were reaccumulated, new holders in a very quiet period, as we mentioned before. And you can see here that this growing foundation actually supports these uptrends in bulls. Notice also, when the bear market kicked in here, and I believe that the bear market really started following the Coinbase direct listing here in April, look how brutal the short-term holders, I mean, when the coins in profit are going down, that means that they're now in loss. We had 5 months of accumulation up here, a massive foundation. This is also a sensitive point. This is showing us we have a top-heavy market. Lots of short-term holders are trapped up here to the tune of almost 5 million BTC got trapped up here, and then all of them fell into a loss in a very, very short order. So again, there's lots of great stuff we can pull out of this. And for those who are into, building systematic models and these types of things, it's these inflection points when these types of models shift very quickly because you're looking at lots of people going from profit to loss or from loss to profit. You've also got these different time elements. How long have they been in profit or loss? It tells you something about their sensitivity and the robustness of the foundation that's getting built. There's a whole bunch of things that we can pull out of this. But this is the concept, right? I wanted to use this model. It's a really, really cool model that we've kind of developed just to help visualize some of these mechanics. What is actually going on under the surface, and how can we visualize this supply moving around the system, changing hands and having different cost bases?